Welcome to the CHCH Newsmakers podcast. I'm your host, Rick Zamperin. If it is making news in Hamilton, Halton, and Niagara, across Canada or around the world, we're going to talk about it right here on Newsmakers. And a lot of attention, and rightfully so, has been paid to the housing market over the last number of years, from price hikes to a lack of inventory to the days of emotional bidding wars. Joining us today on Newsmakers is Conrad Zurini, the broker and owner of RE/MAX Escarpment and Niagara. Conrad, thanks for joining us here on Newsmakers.
Well, thanks for having me.
I want to get into how you became a realtor in a couple of minutes, but
yes,
before we get to that, what words come to mind when you think of the current housing market?
I think it's exciting because, we've had this periods of, 15 years, almost 2 decades of consistent growth. And now it's kind of leveling off. And it's kind of like we're entering more of a real market. I think, when we had, COVID really changed things dramatically and really accelerated the market. But there was already gas in the gas tank pre-COVID, and I think it just accelerated people's need for homes and things like that because there was a specific demographic buying, very similar to what happened in the 80s when baby boomers were, buying their final home, their move-up home, right? So
it was around 2017 or so where we saw a lot of the GTA folks saying, well, Hamilton's a great place.
Yes.
The prices are so much lower, we can move in. And that really, and then you mentioned COVID, kind of putting lighter fluid on the fire. It just exploded.
Absolutely. You're 100% right. And we did see that already happening. So we were tracking it for years, and probably about 30 to 35% of all the people buying in Hamilton at the time were those move-over buyers from Toronto. And then it got as high as 42 and 43%, which was pretty remarkable. Again, driving the prices up significantly because, it was great value. But what's always interesting to me, because I've done it for a long time, and our brokerage stems from like Fort Erie all the way to Oakville. So I watch it very closely. It's interesting that when it's a price point issue, like when it's price sensitive, yes, people will move over, but there's still cachet to living in Toronto and Oakville on the waterfront versus living in Stony Creek on the waterfront.
Right.
You can get them to kind of come, but they think, I'm going to stay with my brand of Oakville, right? So that's kind of an interesting phenomenon that happens in this market.
Especially if they're still working in the GTA.
Yes.
Right?
Mm-hmm. Yeah.
A lot of people also went from GTA to Niagara. Again, the price point was right. A lot of retirees, my parents, for example, were in the GTA. They thought, hey, let's retire and do so in Niagara.
Yeah, and Niagara Falls and Niagara on the Lake did extremely well, and it was a badge of honor how much you paid for your home in Niagara on the Lake and how historically significant it was. But it has it's the tarnish, the shine has come off a little bit, and people are realizing, wow, to keep these homes up, they are beautiful and stately, but it's a lot more money, and it's costing me in my retirement. So we're seeing that market's that's probably the most affected market. It's probably the flattest, I would think, of all the Niagara markets right now.
When did you get into the real estate business, and why? What drew you to this field?
Well, I was I don't know if I can say this, but I'm an SOB, a son of. Can you say this on the show?
What does SOB stand for?
Depends what it stands for. I'm a son of broker, right? So I'm a son of broker. So my parents had a brokerage. They started on a great little street called Parkdale Avenue North, and I went to work with my parents and grew up in that kind of East End, those neighborhoods there. Anyway, so what happened was my parents had a brokerage, and over the years, it was an independent, and then they bought a RE/MAX franchise. I went to university, and they always told me, most parents of like real estate agents, they find something else, do something else.
They dissuade you from getting it.
100%, because it's grueling after hours, all that kind of stuff, midnights and weekends. So they dissuaded me to death, and they said I went to McMaster, graduated from McMaster, and I was going to set out on some sort of I was going to do a master's or go to law school and all that kind of thing. And then I decided, hey, I'll get my license in between when the summer I graduated. And then the rest is kind of history, so to speak. But so I grew up in the business and selling and things like that. And then we were at a crossroads as a business standpoint. And I decided, I wanted to get out of sales. But again, it's hard when you're, 50 or 75 or 80 person brokerage. It's not that it's pretty hard to make a 3 people making a living, my parents, my mom, my dad, and myself. So I thought we have to take a leap. And it was around 2010, we kind of decided to take a huge leap, did an acquisition, and then grew organically. And now from 85 agents in 2010, we're at 1,200. Wow. 1,200 agents. We were 2 offices, now we're 14. So
what's that change like?
It's a lot of fun.
Well, that's one word.
Yeah, and the thing is, because that journey has been so, at 10x, I've had the privilege of speaking all over the world. I speak all over South America, all over Europe, and in the U.S., telling about my journey and how we kind of built it, and talk about the different phases and what we had to do to get to the next phase. And yeah, it's like growing a family, right? At the end of the day, and there's times when the family doesn't get along, and then and then there's times when it's kind of stagnant, and you're kind of looking at each other like, oh God, and what's going to be next. But yeah, you always got to keep I think you got to stay true to your vision. I think any entrepreneur, and I know you've had lots of entrepreneurs on here, I think you got to stay true to that vision. Right. And that's the key thing. And just say, look, you know what? Sometimes you got to break away with what everybody else around you is saying and just kind of break through it. And it's time to grow. And when the market is really good, I think you got to really invest in your business. A lot of people try to cash out and pull money out. What we did was we just focused on investing in our business, because I knew that the watering hole, because it's very cyclical. I knew the watering hole for transactions would diminish over time. People are moving less, and now I don't know if you saw in the U.S., 40 years old is a first-time buyer. We're probably into the 30s here. Yeah. If it wasn't for Bank of Mom and Dad. See, in the U.S., they don't have the kind of equity that we have here. Yeah. So Bank of Mom and Dad's really fueled younger buyers to buy into the market. So yeah, I always felt that the market was going to shrink, and the only way I could offset that was to grow my footprint and grow into other watering holes, so to speak. Yeah. So we're proud to say 2021 was that pinnacle year, and we've surpassed our transaction numbers, but we're doing with more agents. That's the differential. But it was really important for us to grow during those periods of rapid growth. We jumped in with both feet.
Do you remember your first house that you sold, and where was it?
Yes, I do. It was on Grenfell Avenue. I love it. Yes, Grenfell Avenue. And I remember as a joke, because it's very close to Fasco. I remember putting the extra remarks like close to work or walk to work, that kind of thing. Right. And everybody kind of laughed at me. Yeah, I really cut my teeth in that area. I loved it. Because I kind of grew up on Parkdale, so that was an extension, that Barton Street extension. I remember Barton when it was a thriving metropolis, and it was always sad to me. So during university, the reason why I really focused on that area is during university, I had a drapery business. So I kind of, put myself through university. I had a sales crew. I had people selling. I had installers, and we were all university students. So Ottawa Street's where I bought fabric for drapery. Oh, nice. So I've always had this affinity for that area. So when I cut my teeth, I knew that neighborhood really, really well. I used to knock on businesses' doors and ask if they want blinds. We used to knock on doors in the neighborhoods and see if we could sell door-to-door draperies and things like that. So I just got used to it. So Grenfell and all that area there was really my my hood. And I think it was 38,000, 38 or 40,000.
38,000. So that would have been what year?
Yeah, I don't want to tell you how old I am.
Okay, a couple of decades. Let's say a couple of decades.
We're talking about 3 decades ago.
When it comes to this business, what makes a good realtor?
I think, look, again, it's focus, because this is tough. It's a lonely business. And my other bit of advice is don't talk to other realtors. Okay. Because they're all crabs in a bucket, right? Because everybody's checking in with you. How you doing? How you finding things? And you don't know where the conversation's going to go. And if you say it's going great, they say it's going great. If you say it's going bad, they say it's going bad. So eliminate all your real estate friends. Okay. Just hang around with other people and other businesses, because you can learn so much of what's going on in their business and their challenges, which are similar, and how they counter it. So that would be number one. Yeah. And I think everybody's got a talent. And my thing is you got to systemize that talent. So mine was always, I loved stats and that. And I thought, I was never great in front of the camera, so it took me a long time. And then I decided to take these stats and articulate them and explain them, and then started to do a weekly video and things like that. Yeah. So I just take my talent and I systematize it. So I have a weekly video. I never miss it at all. I do a monthly blog, and it's really stats oriented with lots of storytelling and how it applies to what's going on in the market. So stay true to that, because we're all this independent business, and people are attracted to different people at different times. So take your talent, systematize it, and start to apply it into your business. And I think with social media and all that, it's amazing how you can get your story out, and you can show that you're an expert in the industry, and that's what people want. They want to know you're an expert.
What common mistakes do some realtors make? Not on your team, but
yeah, none of our guys. Well, as a matter of fact, what they just follow the pack and they see what's going on out there. Like, I don't know if you follow, like I follow real estate social media. It's kind of like, I don't think consumers say, hey, can you do this crazy video and you dance in front of my house?
Right.
Like, I want that. You know what I mean?
We've seen some oddball stuff over the years, though.
It is oddball. And I think what happens is people think that that's the thing, or these fast moving videos of houses, like that you can't even see anything, these quick, quick shots and jerky shots. I don't think the consumer says, can you make a video that has quick jerky shots in it? Like, no, of my house. I don't think so. I think people just want to know, look, just give me just explain why my house is better value than the next. And I think that's the key element. And I think that's what I would say 99% of the agents miss out. They're just trying to do that next shiny penny. And they're looking at views rather than engagement and all that kind of stuff. So I think that's the critical piece. And stay in your lane. I think when people start talking about top mistakes people make, whatever, just stay in your lane and talk about the market. And people are fearful. They're scared, and there's a lot of people sitting on the sidelines. And I think it's beholden upon the real estate community to talk about all sides of the story. I'm not saying going to candy coat it, but I think people have to make a decision. Like, it's a need-based time right now. Like, people cannot live in a 2-bedroom home with 5 kids or 3 kids any longer. You can't live in your parents' basement forever. You've got to start to get on your own and build an investment. So I think you have to give nuggets of information that kind of will inspire people to kind of move on. You're never going to time the market.
It's impossible.
I don't think anybody has. I don't know.
And if they did, it was pure luck.
Right? Oh, absolutely. Yeah. I don't think there's been many people. Like, there's people that have had great luck and great experiences and things like that. But other than that, it's to time it perfectly. Because I don't know if you remember, but when rates started to increase, like, it was like crickets. Like, so it was March. It was March when we had the first increase. 25 basis points. Then there was another one in the summer. It was like it vanished. Like, we're only talking 50 basis points, like 0.5%, and it was decimation. So can you imagine when it goes up the other way? Because people have a lot of information on their hands. If people start to see these little bright lights in the market, and the minute somebody starts talking about there was 35 offers on something, like, just wait. I think if the economy stabilizes, we have an agreement with tariffs in the U.S., and things start to chug along a little bit, you'll see something incredible. And I won't be surprised if we're going to see a rate increase, mid to end of 2026.
Wow.
And those people that thought, oh God, I was waiting for the bottom of this, and I thought it was going to go lower. Now it's going to go the other way.
At the bottom.
We could be very well at the bottom today.
When it comes to tariffs, what has been the impact? And is it more so the uncertainty around the relationship between our two countries?
Yeah, I think it's primarily that. Look, the thing is, the Hamilton story is incredible because, I was just with an economist the other day, and they said 90% of the industrial base here is affected by tariffs. It's all exported to the U.S. So, we're in a very precarious position here in Hamilton. I think that mindset really got into people because we're only, and correct me if I'm wrong, but I've heard we're only down 10% in exports. So we're only down 10%, but people are looking like it's
the sky's falling.
Exactly. And I think that's the whole piece of the puzzle that is really a part of it. Because right now, rates are at a great spot. We're back to 2021 prices. I don't know. Sometimes there's some areas that are back to 2020 prices. Will we get to 2019? I doubt it. I think we're probably, holding strong at these prices right now. So interest rates are pretty good. Now, if they start to ratchet up, now you're going to talk about your payments being a little higher and so on and so forth. So it's really it's pure mindset thing and need based. Like, people cannot, I was just telling somebody the other day, it was a great story. Globe and Mail had a story about the same demographic, a family, 2-3 kids living in a 2-bedroom home in Toronto, waiting for the market to drop and fearful that their house wouldn't sell. Then the New York Times did the exact same demographic. Now, the interesting thing about them is in the U.S. is that they have these 30-year mortgages, right? They're sitting, 70% of Americans have a mortgage under 4%. People don't realize that when Americans move, we don't have portability in the U.S., so it breaks their mortgage. So they're waiting for rates to drop, right? Canadians are waiting for prices to drop, and it's the tale of two countries, but the same demographic, same need base. They know they have to move, so it's going to be a matter of when people start to say, I can't take living in a 2-bedroom home with 3 kids anymore, that I'm going to move.
That's the breaking point.
To me, it's not going to be rates, it's not going to be prices, it's that that person, and then that avalanche will start. People start to say that social proof, like, you know what, it's okay.
Yeah.
To move because I need more space, or I want to downsize. I'm not going to wait the market out. I'm going to just act.
We can understand their mindset because it is the biggest financial
Absolutely.
decision they're ever going to make. There's no doubt about it. How would you describe the current market? Are we in a balanced market? Is it buyers? Is it sellers? Where's it going?
Well, it's interesting. Some pockets are very much a buyer's market right now. I would say it's buyer balanced, and we're starting to see that. But we're seeing an interesting recovery when it comes to it's not townhouse, and it's definitely not condos. It's condos, especially in Toronto, and that ripple effect. Detached homes is the bright light because people still like that Canadian dream, American dream of owning a home on the ground is so strong, and people will do just about anything. You have to understand, we have about 30, 32, or 35% of people rent. There's another 28 to 30% of people that don't even have a mortgage, and then there's another 30 that have mortgages that are pretty active in the market. That single detached, it's going on price per square foot. So if you don't have a mortgage right now and you start to see these prices kind of get to back to 2021 levels, you know what? People are dipping their toe in. As a matter of fact, single detached in Toronto is 17 days on the market.
Wow.
It's the lowest of any category.
Wow.
Okay, forget about condos because we're talking could be like 6-7 months.
Yeah.
But the months of supply in Toronto of single detached is gone down a month and another month. We're down to probably 3.5 months supply of detached homes. That means if not another house goes for sale, there's only another 3.5 months supply. So that's pretty darn good. Okay, and we're seeing the same thing happening in Halton, and even in Niagara, we're down a half a month. So we're starting to see these inventories getting absorbed in the detached sector. So I think it's going to be a detached recovery because they ain't building any new homes detached. In Ontario, I don't think there's been a single one built detached home. So that whole, people want that, there's that demographic that wants that and desires that and needs that or whatever it might be. They still want to do that. So we're going to see this interesting recovery from that end rather than seeing it, usually it would be condos and then townhouses and from the other end. So it's going to be a recovery from the detached because of the shortage of supply. There's not a lot there.
In the spring, Prime Minister Mark Carney obviously won the election. A big plank in his platform was building more homes. We got to do a better job of doing this. You just kind of referenced that. Is the federal government, is the provincial government, are municipalities doing enough to get more homes built?
Well, it's funny because I'm on the home builders and we kind of we talk to municipalities. It's kind of, look, I think everybody loves this thing about the development charge piece, and I do. I think the development charges got out of control. I think municipalities saw that the prices kept going up and people kept buying, so they just kind of added to their development charges as they went along. Yeah, it is some sort of a barrier to entry. But I will say this: CMHC went from 1 million to 1.5 million for 5% down insured. That 1 to 1.5 million dropped by 20% in 2025 over 2024. So it didn't move the needle there.
Right.
Okay. This is purely a mindset piece. Yes, I think there is a lot of red tape. And if you talk about the average townhouse is probably $250,000 when you think of all the taxes like HST, parkland dedication, development charges, the insurance on CMHC mortgage insurance.
It adds up.
It all adds up. It's $250,000. Yeah, I believe if we can bring that, if we can ease that off. But I want to make sure it goes to the consumer. That's my problem. And look, I don't know. You should have an expert on that whole thing. It's so convoluted. Somebody sent it to me. How to get that money back for the HST? It's so convoluted. Like it's like you got to go. It's got to be a blue moon, and you got to travel, turn around 3 times, and it's outrageous. So I'd love to see that streamlined and get that money back into the hands of the consumer. That's what I would love to see. The first time buyers seeing that back. Maybe they can give some of the money back to their parents. I gave them the down payment, whatever it might be. But I believe that it's kind of convoluted. But I don't, I still think it's this security because, you could, if you don't have a job, so to speak, or if you fear not having a job, it doesn't matter what interest rates are and where affordability.
You're going to be tentative.
Very much so. Very much so.
From a developer standpoint, a lot has been made about, certain developers just sitting on land.
Yep.
They're waiting for that ROI to make sense.
Yes.
Can we give them a push? How do we do that?
Well, I think, look, a lot of them have gone into the purpose-built rental, and I just completed a purpose-built rental. I just finished 219 units. It was slow go. I'm not saying that rental market was as vibrant as people think it is. We don't have enough information on the rental side and the purpose-built rental. So a lot of these people just switched over from condo sales to rental, and they didn't understand the consumer of a rental product is way different than the consumer of a condo, of a purchase product. So we need some more information about that. You can pivot to rental, absolutely, without a doubt. I think that I think we have to be a little bit more creative in terms of some of the designs. On the purpose-built rental side, I see 2 principal bedrooms with 2 en suites, because we're seeing 2 people get together, a mother and a son, or a mother-daughter getting together, or this cohabitation happening. So people want that, both have a principal room since they're splitting the rent. So design has to change in terms of that. And I think design has to change overall in some of this tract development as well. I think we really need to put some time and energy into what people's needs are. Maybe it's small units with common hallways to bring, to have some great principal rooms, bedrooms, and maybe shared accommodation. We might get into that, and you're seeing a lot of cohabitation with multi-generational homes. So we really got to put some numbers, polling, and find out something where people's needs are shifting. I don't think it's just enough to build a little box, a stacked box for $399,000. I don't think it's enough. I think there's some design elements. I think there's proximity to communities, and that greenfield development. And look, I know my friends Elfrida, my friends in Elfrida will kill me for this, but I don't know if that's the real idea, and you're going to have to bring a lot to those people, and then when people move there, they're going to want things. You know what I mean? I heard there's not even a gas station in Binbrook.
You'll need one of those.
Well, you know what I'm saying? So there's so much infrastructure that's not quite there. I think we have to look at development a little differently. And Disney's a great example, because they always do the commercial first, and then they build the residential around, which they've done in their community. So I think a little bit more thought has to go into it. Everybody's just going, how can I get this cheaper? Can I build a stack back to back? It's really ugly. 3-story stacked development is pretty ugly.
Yeah. We've had so many different ideas, thoughts, legislation in terms of increasing the supply, from vacant unit tax to, tax breaks, whatever the case is. Is there a magic bullet, or is it just, throwing darts at a dartboard at this point?
Well, the thing is, too, I always felt like if they're going to do a tax holiday on development charges. So I was involved many years ago with a company called Options for Homes. And what they did was they had this second value, market value mortgage. Okay. And what they did was they put a piece of, some of the land, 5% of the cost of the land. They also had all the development charges, like the City of Toronto put the development charges in there. So it was a combination of things that brought the buyer to conventionality. They didn't have to get CMHC mortgage insurance. So this little second mortgage, you didn't have to make a payment on it. When you sold, whatever the increase in the property was, all the group of people that had their money in this 20% second mortgage all got the same appreciation. So if it went up 10%, their investment went up 10%. Okay, and what happened was they would sell the unit. The people would get they would get appreciation on the 80%, and the other, the developer, city got the appreciation on the other. I feel that is probably one of the strongest, most creative, innovative ways. And what happens is the city won't have to, they're just going to defer. So when the people sell that property, they're going to get their development charges eventually. And I think that, to me, is the better way. And it does preserve price. Because if we now, let's say, for instance, they eliminated all the taxes, and now a townhouse is $750,000. Well, somebody paid back in 2021 $1 million for a townhouse with the development charges in it. That's unfair. Yeah. Right?
You can't reset the market that way. Right?
Exactly. So what I'm saying is, if they did this as a second mortgage, it just sat there. There was no payment due, nothing. And when you go to sell, whatever your appreciation is, or if we share in the appreciation or the decline, it's better than not having the development charges at all. Right. So as you get 3, 4, 5 years into it, now it becomes a fund, and now the cities will still get, maintain their development charge money and that kind of thing. I think, to me, if you ask me, that would be the magic bullet.
Yeah. Are any communities doing that?
No, they Options was doing it for a while, and I know they kind of spread out. It was part of they were spreading it out to the rest of the province. And then what happened was it just got so great, and I think Bank of Mom and Dad became that second mortgage with no interest.
Yes.
And are they going to get it paid back? I don't know.
Yeah.
But you see, that really kind of did that, and I think people are going to run out of that money to do that. I think they got to get creative. And no, I would say there's not a community in Canada doing that at all.
Interesting. The Bank of Mom and Dad.
Yes.
I'm sure with tariffs, the concern about the economy, the job market, that has shrunk a little bit.
Yes.
How has that impacted the market?
Well, yeah, because now people have to wait. They're going to have to wait. They have to build a down payment. We're starting to see young people renting for a little while. And you know, what's interesting, we've always fought with the investor community, but now we have to kind of embrace them, because there's look, everybody's got it on their mind. They want little Johnny and little Susie to buy a house. So they're saying, okay, talk to my investment advisor. So the investment advisor is saying, okay, what does it cost for you to rent that condo in downtown Toronto? X. This is what it would cost for you to buy. Imagine that you did buy it. And there's probably a differential of $1,100 to $1,500. Take that $1,500 a month, I'll put it in an investment, and then by about 4 or 5 years, you'll have a decent down payment. Right. So it's hand in glove with the investment community. So I think that's what people are starting to look at, and helping their kids grow it. Maybe they'll do a matching dollars and things like that, because they are going to run out of runway, and we're seeing a big jump in reverse mortgages. So, you know, just for people to stay in their homes, they need the money to keep them up. So they're borrowing money and doing a reverse mortgage to do that, to stay in their home a little longer. So we're going to run out of runway there, without a doubt. And in some communities, I was just with an insurer, the largest insurer in Canada, which is Sagen. Okay, they're larger than CMHC. They said in some areas it's 40% is Bank of Mom and Dad, but across Canada it's 25% of all the first-time buyers are using proceeds, money from Bank of Mom and Dad.
That's amazing. Back to RE/MAX, Escarpment and Niagara, 1,200 agents.
Yes.
Education, I know, is a big component of revving their engines. Talk about that. Talk about connecting with those agents.
Yeah, it is. And look, we built training areas. We actually built, this is a fantastic studio. I got to say congratulations to you all. We built, so during COVID, so we had training centers all throughout the offices, but COVID, we couldn't kind of travel around as much, and we were broadcasting via Zoom. So we built a television studio in the lower level of one of our buildings. It's about 100-seater, robotic cameras, so that the audience at home could feel like, and it's very much like what we're doing here. So so they could see the audience. Somebody from the audience had a question, because now we have an audience in there now. But at the time, we wanted to make it not just this little flat screen. So we really built that into it, and really embraced it. So yeah, education, it's in our DNA, and we're straying away, like I said at the beginning of the conversation. I'm going away from the traditional real estate coaches and all that, you know, those crazy lines they say, you know, a mile wide, an inch deep, an inch. Like, we're going away from that, and we're actually now going to business leaders in the community, people that have really done, you know, we just had Tom Pastori from Oakview Group. We have Nicole Vanderkent. She's a technology developer and things like that, and she's so we're using this expertise, applying a lot of to real estate, because we sell the product like anyone else. We have to market ourselves like anyone else would have to. We're embracing AI like anyone else would have to. So we're finding that those other industries jump into it much faster, but there's still that relationship, and that's why I love with talking to Tom, because they're about relationships and building relationships with clients, and so are we. And then, you know, Nicole with the technology, it's very much about technology and how we, you know, where technology is going to you know, enter our business, and we still have to have touch points, and there's a lot of interesting data about young people and how they want it instantly. Like, think about they'll buy Uber Eats, pay $25 for a $7 coffee from
It's insane. I don't get it.
Neither do I, but they're voracious.
Right.
They have a voracious appetite for that, and they're willing to pay for it. And how do we transition in our industry to do some of those elements as well?
I think at the end of the day, the younger generation, younger than me, they value their time differently. I think that's the biggest difference in that kind of mindset.
Yes.
Right?
Yeah.
When it comes to technology, you referenced AI, artificial intelligence.
Yes.
Is this a game changer for real estate?
Oh, I think so. I think it's a game changer. And we've looked at it a little differently. So we've got AI, like we look at like buckets. Like I'm not just doing AI for just agents. I'm not just doing AI for my administration and how our back end. We've also done AI for consumers. So we have an AI search. So if somebody wants, I want a townhouse backing onto green space with a white kitchen or something along that line, and it'll pull up that. So there's no more about 2-bedroom, 2-bath. You just whatever you want, and then it kind of matches your feeling. And as you keep going, it starts to recognize your search. So that we also have an AI. Basically, they look at photos of a house, and they have about 8 to 12 different options of changing the kitchen. They can change it to a wood kitchen. Different cabinet styles. So AI for consumers. We do the back end because we've also we've done it with transaction management. We've contracted with a company and helped them out a little bit called Deal Track, and what they're doing is this is the transaction management piece. So it's from listing, and it's documents being shared all along in real time, all the way to the lawyer, mortgage broker, all that kind of stuff. And there's a lot of AI in there. Like when an offer comes in, it can take the top elements of an offer: price, deposit, closing date, give an executive summary to the seller so they can see it. Like here in a quick snapshot, this is what the offer looks like, and let's discuss some of these points. So again, we're using AI for the back end and for the transaction management. Also, we have a huge data lake that we have lots of data that I'm constantly going into and finding out those similarities between this year and last year, or back pre-COVID and things like that, to see some patterns.
It's a huge time saver, I would imagine.
Oh my God, I couldn't. And it's exponential in terms of the amount of content and information you're able to extract. It's unbelievable. We have a stat bot that we have showing appointments. So we monitor appointments. We've been monitoring appointments for 14 years by price point, area, and the whole 9 yards. So we have it all in a bot. And I'm asking, say, hey, where do you see some similarities of these first 2 weeks in November with any other time in the last 14 or 15 years? And it plucks it, finds the pattern. What do you think of this, Conrad? It's kind of funny because, is this okay, Conrad? Do you like it? It's kind of asking me. It's like a human being.
Tell us about the Compound Interest podcast and speaker series.
Yeah, and again, and again, I got a big shout out to Jordan Armany, my buddy Jordan, who pushed me and prodded me to do that, and he does all our social media. He said, and I've been hesitant because everybody jumps on a podcast, right? It's the biggest thing to do, right? You have a podcast. Oh, I feel good. I waited, and I wanted to have something that had some runway. I wanted to have that real estate tie-in. That's why the compound interest. But I wanted to talk about things that that we're all kind of interested in, that do come back to real estate and do come back to sales. I wanted something for a little bit for everyone. I wanted an audience. I wasn't looking for a niche audience. I was looking for an audience that thought, think out of the box. What's happening today in this moment in time? How is it affecting me as a person that's selling widgets, to a person that's selling houses, to a buyer right now, or a seller at this moment? So I just wanted to have that kind of more of a broader sense to it, and it's fun. I really enjoy it.
What kind of feedback are you getting?
Really good. Yeah, I was surprised. It's funny. Until you get a podcast, you find these people out of the woodwork, right? Guys, I hadn't. I did a speech in Florida about 2 years ago. Somebody in the audience says, I saw you speak in Florida, and now I got your podcast. Wow. And it's amazing. Some countries use it for broker training. Like they use my videos and the podcast. Yeah, and they as an example of what they should be doing. So that's what it's about. It's about sharing, growing, and empowering people to make better decisions about their lives and what they're doing.
It's like an educational piece.
Yeah, it's education. It's fun. Yeah, we get a little history of people. It's kind of, get to hear some really cool stories about how other people live their lives, and it's not always what you think it is. So some of that.
You mentioned speaking in South America, in Europe. What's the biggest difference when it comes to real estate in those continents?
Well, it's not as organized as we have it here. Like we have MLSs in North America, and we have a lot more data than they do, but they're getting much better. But it's still the same thing. Like 1 year I did, I think, South America, Europe, and I did something in Florida, and I asked the question, what's your biggest problem right now? And it was the same one.
Really? What was it?
And it had to do with pricing. It had to do with sellers feeling that their home was worth what it was in the peak. And that's purely what it was. And no matter where the market is, and I was just in Portugal, and I was talking to some people from Greece. Greece is kind of ratcheting up again. Okay. Like, you know, I don't remember if you remember, but they got hit with the during the crisis of 08, yes, like dramatically. Yeah. But homes are increasing 15-20% a year. So it's happening, but they're still it's not back to 2021. And then we're trying to tell them that what's happening in Europe is going to happen here, because you're going to get to a point where it's unaffordable anymore, and then the watering hole is going to start to shrink.
So you better get in now, right?
Yeah, you better get in now, and then and take advantage of certain market conditions that are happening. So yeah, it's interesting because you go to Europe and it's like Back to the Future, right? Like, you're like, well, yeah, you try this, and we're in this stage now. You're going to get there, but we did this 5 years ago. It worked, and yeah. Wow. So that's the fun part about that. But consumers are consumers. Yeah. Buyers, sellers, everybody in the transaction, they all want, lawyers to think that, everybody's got to think they have this huge role in this transaction. But I think we all got to work together. That's the key thing. Yeah. And building an ecosystem where you work together and it's more fluid instead of these silos. So that's a big thing that's all over the world. But again, the consumer sentiment is exactly the same, and the desire to own property is pretty strong, throughout the world, really. Yeah.
We've had stories where Canadians are selling property stateside because of the political climate. Are more and more Canadians considering potential property in places like Europe?
Yeah, what's funny? So the Investors Group did a study. They found out the top European countries were Spain, Portugal, and Italy. So people are, and they found out, I think it was one in eight consumers, so about 15% or so Canadians were definitely thinking of retiring abroad, and it wasn't U.S. based. And I think the U.S. thing was happening already. Trump kind of accelerated that again, but the differential in the dollar is pretty substantial. I don't know if you remember, but in South Florida, that was Champlain Towers that collapsed. Yeah. Well, that's really infiltrated itself into existing condos. So the expense of retrofitting condos to make sure that never happens again is really, it's a full court press. Yeah. So
at the insurance factor too, right?
The insurance, weather. So there was a number of things. See, I always call it like it's not one thing. It's like 100 points of light that come together and say, okay, I gotta make a decision. So that was already happening, I think, in the U.S. And just Trump and whatever added a little bit of fuel to the fire. But it's coming back. Where you'll see it. You'll see it shift. I think you'll see it shift. But yeah, there was a lot of that European cost of living too. It's pretty amazing. It's pretty compelling story. I was just, like I said, in Portugal. It was pretty compelling. How much is this? And I get an ocean view. I'm like, oh, that's pretty nice. Yeah. And I think people are thinking about that, from all standpoints, practically and what have you. So you'll see some movement like that. Well, Europeans have been doing it for years. Yeah. It's a little tighter, but we have to go across the pond. But yeah, no, I definitely feel that you're going to see that more South America, Mexico and things like that, of course, right?
Back home, when it comes to hot spots in real estate in the Golden Horseshoe, what are some of the communities that jump out at you in terms of being a hot commodity?
Yeah, I think that Northeast Burlington is this fantastic. Northeast does really, really well, close to 407, close to that kind of transportation. I find anything that hugs the next major thing over, like Southeast Burlington is great pricing. When you go to Southeast Oakville, it's substantially higher price per square foot. So value conscious people look at those kind of hugging, those neighboring things. That area, that Stony Creek along the highway, 50 Point, Grimsby's still pretty vibrant, good price point, access to the highway. The other thing is now we're going to hopefully see the GO station. To me, one of the key things for affordability really is going to be that GO connection. And I understand that there's a significant, from what I'm talking to people from Metrolinx, there's a significant investment going on in Ontario. To me, the transportation piece is probably the biggest affordability piece, because now there's the Centennial. There's one at Centennial. Now I could live in Stony Creek or Grimsby, drive to Centennial, and get to Toronto instead of going over the bridge to Fairview or to Aldershot. So that to me is going to be something that, if we can reduce commutes, I think we're going to be in a much better spot, and people will have a choice of living where they want. The other day I was saying to somebody, people live in Philadelphia and they work in New York, right? That's another state over. Like, guys, you know what I mean? Like that's pretty significant, right? And they thrive and all that kind of thing. So I think if we can really build that kind of transportation corridor, especially along to Niagara, you'll see, because Niagara is a pretty place. It's a warmer climate due to being below the escarpment. Access, obviously, when the U.S. kind of opens up again and people feel good about it, access to that U.S. market is pretty significant, and travel and things like that. And it's a pretty place, and there's a lot to do.
Yeah, absolutely.
A lot to see and do. So I think that's going to be, when transportation opens up, you'll see Niagara really flourish.
It's a great point.
Yeah.
Back to your early days, or maybe even currently, of selling homes. Do you have a funny story, an odd occurrence that you came into when trying to sell a home?
God, but it's kind of a treacherous one. It's kind of odd. I remember it was a friend of mine had a triplex. His third floor tenant was a little bit of a colorful guy, and it's unfortunate. He was dealing illicit materials, and he was actually murdered on the third floor.
Oh my gosh!
Yes.
And then you had to sell this house?
Well, yes.
Wow. What did you write in the description?
Yeah, exactly. And then the thing is, it was funny because the second floor tenant, they were eating dinner, and a drip of blood dripped on their table from the chandelier. Gosh. Not a good story, but anyway. But the good story was this: there was actually 3 tenants. It was a triplex. Okay. I end up selling the property, sold the property, and again, to somebody that was a great opportunity, because the thing said, just get rid of it, Conrad. And the 2 other tenants, they said, we're tired of renting. This catastrophe that happened, is going to push us, and we figured out how to get them financed and whatever. And both tenants ended up buying, sold the property, and the person that bought the house turned it back into a single family home, and is extremely happy. It was a 3-story, one of those stately kind of homes, brought it back to its splendor. He loved it. My client got out of it, and the 2 tenants ended up buying a house. So it was one of those things that there was like 4 deals.
Storm.
It was the perfect storm. Unfortunately, the what happened. But anyway, But there you go. But it was happy at the end.
Pretty well. For any youngster who is thinking, you know what, I want to get into the real estate business, what advice would you have for them?
Well, I think just know your craft. Know, number one, get really familiar with the content, because there's so much information out there. Yep. And what's going to happen is, with AI, there's going to be a barrage. Like everybody's going to have and when I mean a real estate agent, you're going to have an agent bot, like a bot that you're going to go to and say, hey, go on Realtor social media, go on every portal, go on realtor.ca, just gather all the listings that fit, I want this, I want a lakefront condo fees below $300 or whatever it might be, and go out and find it. And that AI agent's going to go out and extract it and then give you some of the options. So, and then you're going to say, okay, now do a price per square foot. What's the best buy? What's going to have the best opportunity of growth? Now, it's going to be fishing in different lakes and gathering information. And even my own lake, my own bot hallucinates. So there's going to be a lot of hallucination. There's going to be a lot of information that's not valid or whatever. And it's going to be beholden upon your realtor is going to really be able to have to, you sit down and sift through this information. And then it's almost going to be like you're going to have a fact check role, I believe, just like media, right? News. It's almost going to be this fact check thing. So I think knowing and being so familiar with the data and what's going on out there, that you'll be able to sift through all that noise and all what's going on, and noise in a positive way. I don't mean in a negative way. All that barrage of information that consumers are going to have, and then you're going to have to guide them through this whole process that way. I think that's that's on the horizon, and I think that's really, really critical. Because like I said, we've been doing appointment data for 14, 15 years. If I wasn't writing the report every week, I wouldn't know when sometimes they try to please you. Like a human being, they try to make a nice graph, and I go, this graph is too perfect. I don't get it. But that's what I thought you wanted, Conrad. But that's not the real data.
You want the real data.
I want the real data. So again, I think you're going to see this transition into that, and we're going to be fact checking, right? as realtors and doing a little deeper dive for our consumers. So knowing what's going on and really having a pulse, so to speak, on what's happening in the community, if it's investment or condos, whatever niche that you're looking in, to have a good pulse of it and really understand what's happening and see if there's patterns that really dig deep into the data and the information. I think is critical.
Fascinating conversation. Thanks for joining us today. Thanks for being a leader in the community, real estate and otherwise. We'll talk to you down the road.
Having fun. Thanks so much. Appreciate being here.
That's Conrad Zurini, and that's a wrap for the Newsmakers podcast. A huge thank you to the all-star cast behind the scenes. If you like today's episode, click the thumbs up, hit subscribe, leave a comment as well. You can catch the Newsmakers podcast on chch.com/podcasts and wherever you get your favorite podcasts.